We were recently asked the question, can I add more money to my existing whole life insurance policy to grow the cash value? This was someone who had purchased a whole life insurance policy a couple of years ago. They had recently reached out to us trying to figure out if the policy was designed for high cash value, and they made a determination that they want that policy set up for maximum cash value. They want to be able to use it and do all of the wonderful things we talk about with cash value life insurance all the time. But his question was this: with my existing policy, meaning not looking at a new one, can I add more money to it to grow the cash value? And this is, in my opinion, an excellent question to ask an agent. Because if you have a whole life insurance policy, the worst part about it, regardless of how it was set up, the worst part was the first year. Because you made a premium payment, and that's where you had less in cash value than what you've paid into the product. The best part about that policy is every year after the first year continues to get better and better because it's compounding, you see cash value show up, and it's much more attractive. So if you have an existing policy and you're interested in cash value, you're learning about how whole life insurance works, you think that it might benefit you, but you see what you have and look at it and say, hey, this is not set up for high cash value. Do I need to abandon ship and take out a new policy? Or can I enhance what I have right now? That's the question I would ask. Because if you can make changes with an existing policy, or in this case, add more money, that will be in your best interest. So let's answer this question. Can he add more money to grow the cash value? Or if you're in this situation, can you add more money to an existing policy? The answer is maybe. It's going to depend on a number of things. Really what's going to come into play is this: limits. What are the limits? There's two limits to be aware of. One, the insurance company limits. And this will depend on the company that you have your whole life insurance policy with. And I'll say this, all companies have different rules, which makes it very fun. But that's limit number one. Limit number two is the IRS. Specifically, this has to do with the MEC limit on a life insurance policy. So if you're not familiar with this term, MEC stands for Modified Endowment Contract. When you look at a whole life insurance policy, why people are often attracted to it is the cash value. When you look at the core benefits of the cash value, they are as follows. There's three of them: safe, liquid, here's the third one, tax-free. So that piece right there, tax-free. What I always like to add here is that it's tax-free if we don't trigger a taxable event, such as this MEC, this Modified Endowment Contract. So talking about the limits with a whole life insurance policy, every policy has a MEC limit, which in summary is the maximum dollar amount you could add into your policy every year in total payments, including premium dollars and PUA dollars. PUAs are how you accelerate the cash value growth. But that MEC limit represents the total dollar amount you can pay into the product each year. So we want to be aware of the limits. Now, I'll say this: if you purchased a basic whole life insurance policy, meaning you just bought a death benefit and you had a premium, that policy has a MEC limit, but you were likely not told what it was in the beginning. So you will have to request that information. It may be on your formal contract. It may be on your life insurance illustration. Your agent can provide it very easily. But for this individual, so when he started his policy, he started it with a premium of $12,000 per year. A little bit less than that, but he pays $1,000 per month. The death benefit, so he just bought a whole life insurance policy initially. Then he found out about the cash value benefits after the fact. The death benefit was about $875,000. So when he started his policy, he purchased a whole life insurance policy, spends $12,000 per year. In the first couple of years, he had a very, very small amount of cash value. And by the third year, this might make you cringe a little bit, he would have paid in how much in total payments? $36,000. The 12K per year times 3. And his cash value at the end of the third year was a little over $8,000. It was like $8,500 or something like that. So not that attractive because he has a basic whole life insurance policy. It's all premium. So can I add more money in order to improve this cash value? Because when I look at it right now, I don't like it. Like, I want this to look a lot better. If I could go back in time and start fresh, I would do things much, much differently with this $12,000 per year. Right now, it's all going toward premium. I would minimize the premium and get as much of it as I possibly can toward my paid up additions rider, which accelerates my cash value growth. So with his policy right now, can he add more money? The answer is yes. We need to get the exact MEC limit, but in a case like this, so if he's paying in $12K per year, and he's got this death benefit of $875, what's going to happen, let's do it this way, is the death benefit has a direct relationship to the MEC limit on a life insurance policy. Age, gender, the guaranteed rate will as well, but that death benefit has the biggest impact on that MEC limit. So he started a little bit before the age of 30. So let's say his MEC limit is $30,000, just for simplicity, to make this example simple. So he purchased a whole life insurance policy, $875,000. He's paying in $12,000. That $12,000 in the first and second year gave him almost nothing in cash value. Can he add more money to the policy? Well, if he's paying in 12 and his MEC limit's 30,000, what that means is that he can pay a total of $30,000 per year. So when you pay money into a policy, it can go toward your premium or toward this PUA rider, stands for paid up additions rider. Sometimes you'll see this referred to as a cash dump in with some insurance carriers. So how much can I add then? About another $18,000 per year toward that paid up additions rider. So what happens here, if we look at the basics of this, his premium dollars, let's make ourselves a little cash value column because this is what he's interested in. Premium dollars, $12,000 he pays. In the first year, what's the cash value? 0. In the second year, what's the cash value? 0. And depending on the company and product, it might be a couple $1,000s. But my point here is he's making these big premium payments, nothing's showing up. The third year, what's the cash value? He pays in $12,000. Now, it's about $8,500. And it gets better and better from that point forward. So beginning policy year 3, premium dollars do come back to work for him. They do show up in cash value. It's money he can't access. I like to emphasize that point because when I hear the word premium, insurance premium, usually what comes to mind is a cost, an expense. For example, my auto insurance policy, I pay a premium. The money goes nowhere. If I get in an accident, I'm glad I paid that premium. But if I'm a good driver and avoid accidents forever, well, then I've just wasted that money in some respects. So usually we think pure cost when it comes to a premium. However, with a life insurance policy, with a whole life insurance policy, it will build cash value. And you will see a positive cash value eventually if you have an all premium policy. But back to this question. I don't like this because it's taken forever. Can I add more money to grow the cash value? Can I grow it faster? The answer is yes. So here, with that PUA payment, if I throw $18,000 in, that's going to show up in cash value. In the first year, that might be between 90 and 95% immediately in cash value. That begins to compound. So for simplicity, let's say it's $18,000. The first year would be a little bit less than that. But my point is a big, big difference there where that shows up in cash value and goes to work. So with his particular policy, If his MEC limit is $30,000, that's the IRS limit that we have awareness on. So we know we can pay up to $30K per year. What's the other limit though? We haven't really discussed this. That insurance company limit. What does the company permit in terms of how low my premium can be and how high my PUA rider can be? Because if this is me, here's really how I would approach it. Meaning if this is me, if I'm the consumer, but I know how to design a policy as a consumer, I would say this. And if my goal is cash value, instead of purchasing a death benefit, if $30K is the most I want to pay into the policy, I never want to go higher than that. That's the highest I'm going to get into the policy on any given year. What I would do is have the policy set up with that $30,000 MEC limit, which would give me that $875,000 death benefit. Here's the key on this though. If you're taking notes, this would be it. Instead of just buying a policy for $870,000 and being told, here's your insurance premium, what you can do instead is this. I'm going to set my insurance premium at $3,000. I am going to add term insurance to the policy. What this does is add more life insurance to the product at a very low cost. This might cost me another $300. So when I add these two together, the premium and the term rider, that gets me a death benefit of $875,000. That $875,000, where would we come up with that? What does that give you in terms of a MEC limit? Do you remember that? It's up here, $30,000. So instead, I'm telling you, the agent, I want to be able to pay in $30,000 per year. Set my MEC limit at $30,000. How much life insurance do I need for that $30K MEC limit? My age, I need just under $900K. Okay. Now the premium piece, from what you told me before, that $12,000, that didn't build any cash value in the first and second year. That's going to be the case if it's $12,000, $100, $100,000, whatever. So here, I'm going to drop it down to $3,000. Why we did that is because that's 10% of my total desired payment. So back to the insurance company limits. Often what you'll find with the top companies, your major mutuals in many cases, is I can set that minimum premium as low as 10% of the total payment. And sometimes it's lower than that, which is good to be aware of. All companies have different limits. But if I've got a $3,000 premium, $300 toward term, what this allows me to do all of a sudden is throw $26,700 into the PUA rider, which really maximizes that cash value right out of the gates, results in a positive cash value much earlier, typically between 3 and 5 years. This is really how I accelerate the cash value growth. So to summarize all of this, the question was, can I add more money to my existing policy to grow the cash value? The answer is it depends. Depends on your particular policy, how much MEC space you have, what the insurance company limits are. Usually the answer is yes when we look at most whole life insurance policies. But what we want to look at then, the follow-up question is, how much can I add? What are the insurance company limits? Are they going to require underwriting or anything like that? And if I can improve the existing policy, then yes, I want to do that. However, if I look at it and see that the room for improvement is marginal and it's not worth it, the performance just isn't there, well then what I would do is look at keeping that existing policy, compare that with a new one where I'm setting it up how I want to set it up from the get-go, the low premium, maximum PUA allocation to really juice that cash value. And then I would compare the two side by side. I would look at both the non-guaranteed values and the guaranteed values so I can really make an informed decision to see if abandoning the old one and going with a new one is truly in my best interest from a cash value and death benefit perspective. Of course, it does depend on your goals, if the cash value is more important or if the death benefit is more important. But if we do everything properly, just knowing the rules of the game, the different limits, and set the policy up accordingly, then the numbers will speak to us and they'll say, this makes more sense, or this makes more sense. And we can make an informed decision without having to take someone's word for it. Anyway, hope you enjoyed this video. If you did, please hit the like button, and we'll see you in the next one. Thanks so much. Hey guys, Steve Parisi here. If you enjoyed the content you just saw, please subscribe, like, and hit the notification bell for future videos. If you'd like more information or to see some custom policies for yourself, feel free to call or email our offices at the contact information below.